The insurance needs to evolve with your company. It really goes back to how qualified you are and how you can sell yourself to that underwriter. The really smart way to do it is find one agent that you trust that has experience in your industry, that they can show you how they can grow with your company. That's really the best thing.
Well, hello and welcome to the BRITE interview series. My name is Jake Rakoci. I'm your host today. Today we're joined by David Helsby. David, thanks for coming on today.
Yeah, thank you.
So you are an insurance expert. You work for Insurance Office of America here in Orlando. So Davis, we're going to be talking a little bit about everything insurance today as it relates to startups, what they can do in terms of how to get insured, the best coverage for them. So I'm sure you can give them all the insights and expert analysis on that, right?
Absolutely.
All right, well, first off, let's just get a little bit of your background and what you do.
So I've been in insurance for about 9 years now. I started out working for one of the largest public insurance companies in the country. It's just interesting working for a company that large and really seeing how they do things from a corporate perspective. After working there for about 3 years, I moved over to working with IOA, which is actually one of the largest private insurance companies. And it's interesting also to see how different they are because we really don't have shareholders besides ourselves and we're not private equity owned. So being one of the largest companies in Florida, we have a lot of flexibility. It's a very flat infrastructure. I mean, the CEO walks by me and actually was the one that hired me. So I've been in insurance for, like I said, 9 years and work with companies specifically for property and casualty and risk management.
So insurance, I think that's one of the most intimidating things that a startup hears when they're getting going is, oh, I need insurance. So Just take me through the process first a little bit. What's the first thing that a startup has to do when it comes to getting insured?
So I think the most important thing that I would say if I'm a startup is really you're selling your company to the underwriter. As an underwriter, you don't want any claims. You want to take in as much premium as you can and pay out the least you really that you're allowed to do. And so that being said, what you want to do is make sure that you have a business plan in place as the startup, an updated resume that really shows your qualifications on what you're able to do. Any sort of associations that you've been a part of, any sort of designations that you've done, and any way that you can demonstrate that, you know what, I know what I'm doing with this company and we're going to be a good company to insure. That's really the major focus that I would kind of push on startups. The example being, as an insurance agent, I don't have any experience really in roofing. So if I want to say I'm going to start a roofing company, that's going to be an immediate red flag for an underwriter, and I'm not going to get coverage. Whereas if I said I worked for 20 years underneath one of the largest roofing companies, I have designations that shows I'm qualified to do it, you get a quote like that. So it's really just selling to the underwriter.
So a lot of it is kind of getting your ducks in a row, kind of like you're preparing for a job interview maybe, where you're doing research, you're making sure everything looks good. All right, so tell me about what an underwriter is exactly. I know you don't do that specifically, but that just kind of sounds like an intimidating term for many people too.
Really, it's a very complicated but very simple process if you go to the right person for it. So really you have the insurance carrier, like a Liberty Mutual, a Zurich, a CNA, a Travelers that you see sponsor all the golf tournaments and see commercials on them. They're the ones that actually have the financial burden of paying out the claim whenever that takes place. The underwriter is the one we call has the pen. They're the ones that are making sure the terms are in place. They're the ones that are providing the quotes, and they're the ones that are really negotiating all the terms. As an insurance agent, I work with independent insurance agent. I work with close to probably 1,000 different insurance carriers that are around. And what we do is we go out and negotiate with certain ones in certain different types of industries that are the best fit for your company. And then once we get all the information together and the best quotes, then we go out and present to our client, which would be the startup company.
So how hard is it out there what's the market looking like overall for startups? How difficult is it to find good insurance?
It really goes back to how qualified you are and how you can sell yourself to that underwriter. I mean, there's a lot of companies actually startups in InsurTech that are really focusing on just startups because there is such a big market for it. And I would say that it's a little easier than you would think it is. The problem is a lot of times it can be cost prohibitive or the terms can be prohibitive to purchasing coverage. For example, if you're a new startup and you're cash strapped, trying to do everything you can, and someone gives you a quote for $40,000, that's not something you're going to purchase.
Yeah.
So it's really just aligning what you need at the right point in time and make sure that's okay for you. I mean, you don't want to be an insurance rich or insurance poor, because we'll talk about it. That probably is a poor reflection either way for investors.
So take me through what that means exactly then, the difference between being insurance rich and insurance poor. I'm assuming it's something along the lines of you're paying a massive premium that's going to scare investors away a little bit, or how does that work exactly?
So I would say insurance rich would be you purchase every insurance that you can possibly find, and you're completely overinsured, meaning that you're really paying for something that's not going to actually pay out. Insurance poor means that you're negating key coverages that are protecting your company, that you're just essentially saying, you know what, that's just not for us right now, and you're really rolling the dice on self-insuring it versus actually providing a policy that pays out on your behalf.
So what would you say are the big things that startups need to make sure they're insured on?
I would say it really kind of exists pre and post funding, and whether you actually have assets. So if you don't have any assets and there's really nothing to protect and you're sued, I mean, you should be incorporated, and it's not going to pierce you personally for your personal assets. So it's kind of like, why are you purchasing certain types of insurance? Now, once you start having assets, you start taking on capital, you start moving into certain areas, you're going to be required to purchase types of insurance, whether it be property insurance or general liability for a lease. It could be auto insurance for moving around. And really, the insurance needs to evolve with your company.
So how does a startup identify the best kind of coverage they can look for? Is it all about calling around and finding different people, talking to many Davises out there? Or how does it work exactly?
I think going to that question, the biggest mistake I see startups doing is they think to themselves, I'm going to go out to 4 different insurance agents and get all these different quotes, and everything's going to come in, and I'm going to make the decision on what's the best thing. The really smart way to do it is find one agent that you trust, that has experience in your industry, that they can show you how they can grow with your company. That's really the best thing, because they're going to work with you as you grow, and making sure you're not overinsured or underinsured, and make sure you don't have the key exposures as your company grows.
So is that essentially what you do then?
That's exactly what I do, and I would say it's almost a turnoff when I'm working with a new company or a startup and saying, well, you're one of the 4 agents that I'm working with.
Yeah.
And I say, are you really worth the time for me to work? Because it's also important for startups to understand is that we're actually compensated based upon a percentage of the size of the premium. So to work with a startup as an insurance agent, you're almost taking the hit up front with your time, hoping that they grow, and actually helping them grow and being their advocate, because eventually then it will be the big company that you hope they are.
So essentially you're taking a risk when you're taking on a startup too. So what do you look for when you identify possible startups that you may insure?
I think probably identical to the majority of investors: growth potential, how qualified the people are, how fun and enjoyable they are to work with. I would say that's a big part of it.
You gotta like who you work with. So.
I mean, there's no way I would spend my time working with someone who's a jerk, despite how much their growth potential is. And so really probably a lot of things is how fast are they going to grow, how much time is it going to take, can I really feel like I'm going to help them grow and really be their advocate? Because a thing insurance agents do is we're out in the community, dealing with people and associations on a normal basis, and I try to be an advocate for, and I just say insurance agents are advocates for the clients, trying to connect them to help them grow.
So in a roundabout way, when you're taking in startups, it's kind of similar to what BRITE's hoping to do in terms of crowdfunding investing. What are your thoughts on crowdfunding investing? Just because I feel like in a way you kind of have a back seat to that when you're taking on companies as an insurer.
Absolutely. So crowdfunding, that's one of the fastest growing industries that's around. And you read in the articles, it's soon, I guess if it grows on the current trend, to overtake venture capital and private equity as a capital structure. And really, insurance carriers, they evolve with the times. In fact, AIG in 2016 has put out a specialty insurance products that protects investors from platforms, whether they have fraud or lose their capital because of issues. There's specialty products out there to help them insure.
What do you think the future of insurance in terms of startups is looking for, and specifically how they relate to crowdfunding?
Really, it's claim related and regulation related. And so what happens a lot is there's a product that comes around, it's new, and it goes out in the marketplace, and next thing you know, a claim comes in that they didn't expect or intend, or regulations come in and which finds where insurance carriers lose. And then those products evolve as those claims kind of evolve. So really insurance evolves along with the industry.
Yeah. Have you had any experiences with that at all, or any stories you'd like to share where something unexpected happened working with a startup?
I can't say I have. A lot of the startups that I work for, I do more mentoring versus they're actually my clients. In fact, for the National Entrepreneurship Center, I helped a lot of the startups understand what it's like to actually procure and go through the insurance process. A lot of companies that you can see on their line items, they just have insurance, $250, and without fully understanding what that entails. And so that's a big part of what I do. So I can't say specifically any nightmare scenarios.
Well, I'm sure it's a lot of an afterthought for people who are just getting their business going, because they're thinking about everything about making their business grow, but they're not thinking about having it backed up by insurance, right?
Exactly. And then, from an investor perspective, to your question, if you've gone through the insurance process in discussion with an agent, whether or not you've purchased a certain insurance product or not, it shows that you have the foresight as a business owner to be looking and trying to manage your risks. And so if the question comes around and says, well, did you think about XYZ coverage? Your return is, actually, I spoke with my insurance agent and we identified that this is not the right time, but in 3 months, once we cross a certain level, we're going to be purchasing that coverage and the price is this. I mean, I think as an investor, my eyes would open and say, okay, these guys know what they're doing.
So the students you were working with, they were over at the Crummer Graduate School then?
Some of them were, yes.
Okay.
Yeah.
So what was the big things that you were noticing about them when you were talking insurance with them?
They come out very qualified. I think that school does an incredible job of helping people just understand the big picture of the business environment and really trying not to have them be blindsided by certain aspects of growing.
Any final thoughts on startups becoming more attractive to investors? Because really at the end of the day, you need to have that insurance to become attractive to investors.
Absolutely. So one key coverage that I wouldn't say gets overlooked, but you're going to be asked about, is something called directors and officers coverage. So really there's 3 types of coverage, and not to get into technical aspects of it, just know that that's something that if you're starting to take capital in or you're starting to build a board, it really protects the board from personal liability. So I would have that discussion earlier than later, because the more sophisticated investors will not invest unless you have a solid D&O policy in place.
Great. Any final thoughts, final advice to any startups out there that are in that process where they're starting to look to become insured? Should they be contacting you?
Well, I would say if you're a startup, don't be afraid of the insurance process. I would start it earlier than later, because the times that you're going to get yourself in trouble is when you all of a sudden you have to get that insurance in place and you have to do a knee-jerk purchase rather than just have it in place. We all the time issue out quotes that have 30, 60, 90 days period of time where you can just think about it, and just having that discussion beforehand versus afterwards. And the final thing I'll leave you with is the best time to adjust a claim is before it happens. So understand your risks beforehand and the policies that are in place, and then it would be just fine.
Well, Davis, thank you so much. I appreciate this sage advice and coming on here and giving all your tips to startups. We really appreciate it.
Of course.
And thanks for joining us on this episode of the BRITE podcast series.